Nifty poised for a potential surge towards twin 4,500 today. Will it hit our upside target? Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026 July 20th, Monday, dawns another vibrant, warm, and positively charged day for the markets. Let us deep dive into the detailed reports. Mounting geopolitical tensions between the US and Iran intensified over the weekend, with renewed military strikes and reports of oil flow disruptions through the crucial Strait of Hormuz, pushing crude prices sharply higher. This escalation could significantly weigh on India's import bill and fuel inflation readings, putting the spotlight on energy-sensitive sectors and potentially pressuring the rupee against the dollar. The People's Bank of China maintained its 1-year and 5-year loan prime rates, signaling a consistent policy approach amid global uncertainties and efforts to stabilize domestic growth. This expected hold leaves room for some stability in Asian market sentiment, though it underscores a cautious stance from Beijing that might limit upside momentum for India's export-oriented sectors dependent on Chinese demand. The US has imposed new 25% Section 301 tariffs on Brazilian imports, signaling a widening scope of protectionist trade measures. This action highlights persistent global trade frictions, potentially weighing on broader market confidence and raising concerns for Indian sectors with international trade exposure, particularly those in metals and manufacturing that could face ripple effects from disrupted supply chains. New Delhi has greenlit the Semicon 2.0 policy, a strategic follow-up to the successful production-linked incentive scheme for mobile phone manufacturing, aiming to establish India as a major hub for chip design and fabrication. This initiative spotlights the electronics manufacturing and technology sectors, potentially lending significant support to companies engaged in semiconductor production, design, and ancillary industries, fostering investor interest in long-term industrial growth. Several Indian corporate heavyweights, including HDFC Bank, Reliance Industries, and ICICI Bank, have posted robust Q1 FY27 earnings, largely exceeding market expectations and signaling solid operational performance. This strong corporate commentary and improved profitability could lend significant support to the broader market, particularly the banking, financial services, and diversified conglomerate sectors, shaping sentiment heading into today's session. RBI Governor Sanjay Malhotra reiterated that India's economic fundamentals remain robust, even while acknowledging potential risks from the West Asia crisis and an uncertain monsoon season. His defense of the rupee's performance amidst global currency fluctuations reads through as a calming influence, potentially steadying sentiment around financial and import-sensitive sectors, leaving room for central bank flexibility on monetary policy going forward. Escalating US-Iran tensions have pushed Brent crude futures to $90.97 a barrel, following renewed military action and Strait of Hormuz threats. This escalating conflict could weigh on India's import bill and inflation, putting the spotlight on OMCs and logistics sectors, while global risk aversion may lend support to defensive plays. Global rare earth supply chains face persistent shortages through 2030, driven by China's expanded export licensing and insufficient non-Chinese capacity. This geopolitical scarcity could challenge India's growing EV, electronics manufacturing, and defense sectors, leaving room for increased focus on domestic material development and strategic global alliances for critical inputs.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Come and show love and share your happiness. Let's win together!
Foreign investors sold 376.41 crore rupees. Domestic institutions bought over 1,017 crore rupees. This domestic strength likely offsets foreign selling, supporting today's market. If we look at yesterday's sectoral data, We see a clear rotation where Nifty Private Bank and Nifty IT are showing robust gains both yesterday and over the week. Conversely, Nifty Metal and Nifty Pharma are experiencing significant outflows, indicating money is shifting into financials and tech and away from materials and healthcare, shaping today's positioning. Let us look at global events. India's Consumer Price Index for June 2026, released on July 13th, came in at 4.38% year-on-year. This figure, slightly below expectations, pushed inflation above the Reserve Bank of India's 4% midpoint target, signaling persistent price pressures. Global markets showed broad weakness overnight, led by sharp declines across Asia. Jakarta and London offered a few bright spots. US futures are largely flat. Indian traders should expect a subdued open amidst the regional negativity. Now let's review key Indian stocks in focus for today's trading. Reliance Industries is active following quarterly results released Friday night. HDFC Bank and other major private banks announced Q1 earnings over the weekend, prompting interest. Network 18 Media reported strong Q1 fiscal year 27 revenue growth of 10.3% to 516 crore rupees. Bajaj Consumer Care received a brokerage upgrade from Nuvama with a raised target to 760 rupees. Puravankara's CEO shared Q1 performance updates. Let's check what the RAS levels are saying about today's Nifty levels. We're looking at a breakout level today of 24240, with a breakdown level at 24224. If the market turns bullish, resistances to watch are R1 at 24297, R2 at 24353, and R3 at 244410. Should the market fall, supports are S1 at 24168, S2 at 24111, and S3 at 24054. Today's CPR sees the top at 24301, the pivot at 24267, and the bottom at 24233. Analyzing the options matrix and derivative distribution, the Nifty's options matrix for the 2026 July 21 expiry reveals a decisive bullish pivot, anchored by a significant PCR surge from 0.766 to 1.578 and a max pain shift from 24,100 to 24,250, indicating aggressive short covering and long build-up. Major call, open interest at 25,000, and robust put, open interest at 23,000, delineate an institutional tactical range of 23,000 to 24,200 support and 24,700 to 25,000 resistance, suggesting a strong upward bias towards breakout. India VIX closed at 13.15, showing a 2.10% rise from its previous close of 12.88. The 5-day trend is mixed. A rising VIX at higher market levels is a caution flag, suggesting potential for increased volatility or a fall in Nifty. The central pivot range is positioned at TC 24,301, pivot 24,267, BC 24,233, expecting normal movements in the market today. Gift Nifty opened at 24,374 against Nifty's previous close of 24,349, indicating a flat opening with a 25-point gap. This suggests Nifty may open flat today, but confirmation is needed. The no-trade sideways zone is between 24,224 and 24,240, where market movement will likely lack direction. A breakout above 24,240 could yield 261 upside points, reaching 24,500. Conversely, a breakdown below 24,224 could see a 56-point decline to 24,168. Previous trading day, Nifty moved 207 points, which was bullish. The weekly move was 295 points and the monthly move was 437 points. The close did not sit tight against either extreme, so there is no strong directional carryover signal into today. And now time for our final verdict on today's session. Indian markets are showing a strong upward trend today, with the Nifty index rising by 1.09% to 24,334.3 and the Sensex gaining 1.25% to 78,151.45. Both these key indices closed above their breakout levels, indicating strong momentum. Nifty futures are trading at a premium of almost 10 points to the spot index, signaling bullishness, and we're seeing significant short covering, which is a positive sign. Options data further supports this, with a put-call ratio of 1.578, showing a bullish bias and strong support building up around the 24,000 and 24,200 levels. Sector-wise, private banks and information technology are leading the charge, with 37 out of 50 Nifty stocks moving higher. Domestic institutions have bought over 1,017 crore rupees, absorbing the foreign selling of 376 crore rupees, which lends stability. However, a note of caution, our custom RAS EMA trend signal remains bearish across all major indices, including Nifty and Sensex. Additionally, both Nifty and Sensex are below their 200-day exponential moving average, suggesting a longer-term bearish bias. Global markets are mixed, leaning negative in Asia, and the India VIX, a fear gauge, has risen slightly by 2.1%. Weighing these signals together, we observe strong immediate bullish momentum driven by futures and options activity, but with an underlying caution due to the bearish technical EMA signals and broader global market weakness. And that brings us to the close of today's Trade Vision pre-market report. Don't miss a beat, subscribe and hit that bell icon for daily updates. If you found today's insights valuable, please give us a like and share this video. We'd also love to read your opinions and advice in the comments below. Here's to a wonderfully profitable day for you.